Good morning, good morning, good morning. Oh, pardon me. It's Friday, the 17th of January. This is today's morning blast with myself and Mr. Michael Brown. And he is there already. Invite co-host. Send co-host invite. That should be winging its way to you, Mr. Brown. Whilst I wait for you.
Very good
Oh,
morning, Ryan. Good morning, everyone. Happy Friday.
oh God, you sound very happy about it being Happy Friday. What?
As happy as ever.
Yeah, exactly. One sec, let me just tell everyone it's live. It's live. There we go. Post that. Let me do the legals. It's not, as usual, nothing discussed in this Spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading PIQ or PIQ Suites, or indeed the hosts, which, as you know by now, is Mr. Michael Brown, way, and Mr. Ryan Paisley, way.
Oh dear.
Oh dear, what's occurring? Go on.
Well, indeed. Well, firstly, just a forewarning. I am doing this call from my desk this morning, so apologies in advance for any background noise from the one other person who's made it into the office so far this morning. In any
Keep it
case, in terms
down.
of where the yeah, it's quite. Anyway, in terms of the markets this morning and yesterday, we saw a decent move across the Treasury curve, actually, after some dovish, albeit heavily caveated commentary from Fed Governor Christopher Waller, although markets elsewhere just meandering along, to be completely honest with you. Nevertheless, we did see the 10-year Treasury end yesterday about 6 basis points lower, dipping below 4.6, while we also saw benchmark 30-year yields fall by about 5 basis points, trading below 4.85%. And again, that was as a result of that aforementioned Fed commentary, where Christopher Waller said that this week's CPI figure was, quote, very good, and that if he sees more data like this, they may deliver more cuts in the first half of the year, with it not being possible to rule out a cut as soon as March. Waller also saying that the Fed may deliver more cuts than the market currently prices if inflation continues to move lower. And just for reference, of course, the market currently pricing about 42 basis points worth of rate cuts by December, so about a 70% chance that the Fed deliver 2 25 basis point cuts this year. Of course, there were a lot of if, buts, and maybes in that commentary, so I do think the reaction in treasuries may have been a little bit over the top, and that may also explain why markets elsewhere really just took that in their stride, with the S&P closing down by a modest 0.2%, but we have recovered those losses in the futures market overnight, and the dollar trading very slightly softer, with the dollar index briefly dipping beneath the 109 figure, but again, the greenback has managed to recover those losses during the Asian trading session. In terms of other fundamental drivers yesterday, there is actually quite a lot to get through, so
Go
let's
on.
break
Go
into
on.
that. On the data front, we had the December retail sales figure out of the United States. Headline sales rising by 0.4% on the month, below the 0.6% that consensus had expected. But actually, the report was more solid than that headline reading would imply. Control group sales, they rose by 0.7% on the month, which is about double the consensus estimate. And of course, that is the basket of goods that feeds into the GDP release. We also saw the November sales metric revised higher from 0.7 to 0.8%. So actually, the retail sales numbers pretty solid indeed. Meanwhile, we also had the latest jobless claims figures out of the United States. Initial claims rising to 217,000 in the week ending the 11th of January, up from a prior 201,000. Claims are very, very volatile around this time of year as we move through the Christmas and New Year period. Excuse me. So I wouldn't read too much into that data. And of course, neither the initial nor the continuing claims print pertains to the survey week for the January non-farm payrolls number. And last but by no means least, in terms of US economic data yesterday, all seems absolutely fine and dandy in Philadelphia. The Philly Fed's manufacturing index in January rising to a whopping 44.3. That was expected to come in at -5. So I'd like a word with whoever gave the forecasts for that one. So clearly a huge beat, and that is the index's highest level since April of 2021. Of course, these regional Fed manufacturing surveys feed in, or are a useful leading indicator at least, for the ISM manufacturing PMI print that we get towards the start of February in a couple of weeks' time. In terms of news flow, there was also a relatively busy day, kicking things off in, we'll start with the political arena as expected. Mark Carney announcing that he is going to be
God.
running for Liberal leader and therefore Prime Minister in Canada. He is coming up against the former Canadian Finance Minister, Chrystia Freeland, test. I think that is due to wrap up on the 9th of March. I did find it rather ironic that Carney said during his remarks yesterday, and I quote here, "I will be completely focused on the economy as Prime Minister," which is rather odd because when he was BOE governor and it was his job to focus on the economy, he spent his whole time focusing on politics, and now he wants to be a politician. He wants to focus on the economy.
Let it
So
out.
it
Let
seems
it
like
all
the
out.
unreliable
Come on, let it
boyfriend.
all out.
Well, the unreliable boyfriend is still as unreliable as ever. Moving away from that, story for Tom Talks Cars if he's woken up just yet and he's out of bed. China, they are going to launch an anti-dumping probe into US chips. This is because the Chinese chip industry is getting quite annoyed that the Biden administration has thrown a whole host of subsidies to the US chip making sector. Again, bear in mind that this is as a result of Biden's policies. Biden is, gone from Monday onwards. So we will see if or that changes the game there. Speaking of US political developments, we also heard reports yesterday in terms of what Trump may be looking to do on the sanctions front. Apparently, his team are looking at a wide-ranging sanctions plan that might help to facilitate a peace deal between Russia and the Ukraine. Although when you dig into this reporting, apparently Trump has two potential approaches. If there's an end to the Ukraine war in sight, then he is looking at, quote, good faith measures, which may ease some of the sanctions. Or if there is no end to the war in sight, then he is looking to put in place even more sanctions. So effectively, not really clearing up the situation at all with that reporting, but just goes to show how much uncertainty there is ahead of the inauguration on Monday. Other bits and bobs, we did have some M&A news which broke late yesterday, and that is that Rio Tinto and Glencore, they are said to be in discussions about a potential merger. This would, if it goes through, be the largest ever has seen. It is unclear, according to Bloomberg reporting at least, whether these talks are still live, but nonetheless, Glencore finding some upside in reaction to that, and that has also, given the stock's significant weight in the index, helped to push the FTSE 100 to a record high in early trade this morning. Just as a standard reminder, and Sam North reminded me of this earlier on, the stock market is not the economy. The fact that the FTSE is at a record high is not suddenly a vote of confidence in what Chancellor Rachel Reeves or anyone else is doing in terms of UK PLC. One other thing on the monetary policy front. The ECB looks set to lose one of its most dovish members of the governing council. The Portuguese government reportedly will not be naming Centeno for a second term as governor of the Bank of Portugal. His term ends on the 19th of July. Actually, doing all sorts of promotional stuff this morning. EconoStream had a decent article out yesterday. I'm sure Brian can put it up somewhere. They were running through all of the people who may be leaving and may be coming into the ECB's governing council over the next kind of 12 to 18 months, which is worth a read on a quiet Friday. And last but by no means least, a few bits on the banking sector. Bank of America and Morgan Stanley delivering very, very strong earnings before the open yesterday, both trading around 2-3% higher during the session, wrapping up what was a very, very strong Q4 bank earnings season. And lastly, on the banks, one bank that is not doing particularly well remains HSBC. They are going through a big restructuring at the moment, and they are looking to cut their bonuses quite significantly, particularly in corporate and investment banking. They want to cut $3 billion off their expenditure in order to deliver that restructure more efficiently. Last but by no means least, just to wrap up what's happened overnight in terms of data, we had a bit of a data deluge. China growing, apparently, if you believe the numbers, by 5.4% on an annual basis in the fourth quarter, above the 5% the markets had expected. We also saw industrial production rise 6.2% in December and retail sales rising by 3.7%. Again, take that with a huge pinch of salt. We also had retail sales data out of the UK about an hour and a half ago. The figures utterly disastrous. Headline sales falling by 0.3% on a month-on-month basis in December. That's compared to the 0.4% increase that market participants have been expecting. When you take fuel out of the figures, sales actually fell by
Ugh.
0.6%, down from the 0.3% increase that participants have been expecting. Naturally, we've seen a dovish reaction in UK assets, cable losing about 40 or 50 pips down to a low of about 121.60. We've also seen the market raise its bets on BOE easing, now assigning about a 92% chance of a rate cut in a 25 basis point cut in February, and also pricing about 66 basis points worth of easing by the end of the year. And that's up from about 63, 64 basis points this time yesterday. So clearly, the stagnation slash stagflation narrative that it has dominated the UK discourse for a while, that will not be dispelled by the
Yeah,
data
it
that we
feels
had
very
this
much that
morning.
fears are being realised is the problem, and I think that's yeah, and I can't see it turning around any time soon, unfortunately. So yeah, it's
No,
definitely feels like
I make you absolutely
one of
right on that
those.
one.
It's going to get a lot worse before it gets better. Unfortunately, is my opinion. Just a couple of things on stuff that you've mentioned. EconoStream, big shout out to them. Their feed is actually available on PIQ as well, so check that out. They do some very very good ECB commentary. Also, just one on the this Glencore Rio Tinto merger, because it is so big. This strikes me as one that even if it was still live and it was going ahead, the UK being the UK, they don't like to see success stories and things like this happen. You can see them throwing the Monopolies Commission and all that at it, and this could be a very, do you know what I
Oh,
mean? This could be a
absolutely.
very long and drawn out saga if it is still alive in the first place. So,
The other
go
thing
on.
that I would say on that, and you're absolutely right, the competition folk will
Yeah.
be all over this. The other things to bear in mind, and forgive me, I can't remember who mentioned this to me on Twitter last night, but whoever did, well done. If it does go through, is this going to mean that Glencore pull out of the London market?
Oh
Because
yeah,
obviously
yeah.
Rio did a while ago, and Rio obviously
And I'll
lists in
give you a
Australia,
clue. The
so
the, the
bear that one in mind.
FTSE won't be in all time highs if that happens.
No,
So
absolutely not.
unfortunately, obviously no trading advice, but you might want to be thinking about fading the FTSE. This is not trading advice.
Yes,
This is not
quite.
trading advice. But the UK PLC is doomed. But thankfully, the FTSE is, in terms of the profits made out of the UK, is kind of quite slim. It's it's, as we know, it's more of commodities based and all that palaver. But anyway, so a few headlines from me from our dear friend Zach, which goes into the overnight news roundup. Starting with in the US, so Steve Bannon. Remember him? He's been advising Trump to apply across the board tariffs on China as well as other countries, highlighting the divide on trade policy amongst Trump's advisors. Trump is planning to release an executive order elevating crypto as a policy priority and giving insiders a voice within the administration. I'm sure our dear friend Cam will be saying more about this in the crypto blast that goes out momentarily or in an hour or so. China's new home prices stopped falling month on month in December for the first time in 18 months. So obviously, people are clinging onto that as a sign of potentially a turnaround in effect. Sticking with China, China's population fell for a third consecutive year in 2024, with the number of deaths outpacing a slight increase in births. Experts are cautioning that the downturn will worsen in coming years. What else we got? European car makers led by Volkswagen, could be forced to pay hundreds of millions of euros to Chinese EV rivals to buy carbon credits. That's as the auto sector tries to avoid potential fines for failing to meet 2025 pollution rules set by Brussels. This does not go down very well with anyone, in my opinion. The fact that because of the EU's kind of draconian laws on EV, well, trying to force European car makers to sell trying to force European car makers to sell EV vehicles, which they just can't sell enough of them. The fact that people like Volkswagen are going to be cap in hand to China to try and buy carbon credits is going to play very, very badly politically, in my opinion. I don't think there's any argument for that. Copper headed for an straight day of gains in its longest winning streak since 2017. That's as fresh economic data from China brightened the demand outlook. But as we know, and as Michael Brown just said, take Chinese data with a pinch of salt. Some good news out of the Middle East. We've
Yeah,
got
and if anyone comes out with that Dr. Copper
oh, get in,
nonsense, then
yeah,
go and give
get
it
in
in
the
a wobble.
sea. Uh, Some good news if you have been living under a stone is that Israel and Hamas have agreed a hostage deal, although we do know it's a bit flighty at the moment. So something to keep an eye on there, but good news nonetheless. A growing number of researchers fear that TikTok is promoting pro-China content and softening attitudes towards the People's Republic. In equity space, obviously the big news is what Michael covered with Rio Tinto and Glencore. But what else have we got? Because that was what I had in front of me. Nintendo stock dropped sharply after the company's announcement late last night. That it would be releasing its next gen Switch 2 console in 2025, and that contained little surprise for the market. I think the market was waiting for a lot more, but didn't get it. Gaps in California's insurance system could lead to serious failures in coverage for the LA firestorms, leaving reinsurance companies virtually unscathed. That's according to city analysts saying reinsurers could ultimately absorb less than 3% of insured losses. Now, we did talk about this yesterday. Be careful when you're seeing the insured loss estimates, because that's nowhere near the potential kind of total losses. And and as this article in the FT states, could be as little as 3% are actually insured, which would be disastrous for the people out there that are having to foot the bill. And finally, Rivian Automotive said it closed a loan agreement with the Department of Energy for up to $6.6 billion to support construction of a new manufacturing facility in the state of Georgia. And that's all from me. Back to you in the studio.
Good stuff.
Thank you.
Uh,
I said thank
sorry.
you.
Oh, well, in terms of today, then, there are a couple of things on the economic docket, but none of them are likely to be particularly market moving. So, to rattle through things relatively quickly, at 10 o'clock this morning, we have the final read on December's Eurozone inflation figures. Headline CPI expected to remain unrevised at 2.4% on an annual basis. Moving in to the US session, we have the latest housing starts and building permits figures due at 1:30, and then we get December's industrial production data at 2:15, where production is expected to have risen by 0.3% on a monthly basis compared to the 0.1% decline that we saw in November. No notable earnings due on the docket today, although earnings season does continue next week and, well, for 2 or 3 weeks after that as well. And then in terms of monetary policy, we are due to hear from, well, firstly, a bit of housekeeping. Of course, the Fed's pre-meeting blackout period that begins at close of play today. And then in terms of who we will hear from, we are due to hear from the ECB's Escriva, Centino, and Nagel. And we are also due to hear from the BOE Governor Andrew Bailey at about 5 o'clock this evening, who I happened to bump into a little bit earlier on, pulling his suitcase along Gracechurch Street at about 6:30 this morning. And that is your lot from me this morning and
Did you
for
not get
this
a
week.
selfie?
No,
Oh,
sadly I
mate,
didn't.
come on. Next time you need to get a selfie, or at least drop him a PIQ card or something.
Do you know what though? And
Go
just on
on.
that, I know I've said this before, but I am staggered that the bloke can just wander around with no
Yeah.
security, nothing. Like he is, I would argue, probably the most powerful and influential unelected man
Yeah.
in the country, and he's just mooching about the city
Mooch.
as you or I would.
Well, staggering is what I tend to do, but yeah, I get your point. No, but it is mad, really, when you think about it. Because, like, God forbid something were to happen to him. Yeah, the pound is going
Yeah.
to absolutely tank. But yeah, not that
Well, although I must say, I would rather that than the Canadian. I can't use the word I was going to say
did,
because it's a
did it
family
start with
show.
C?
But that Canadian bloke who insisted on a bloody chauffeur-driven BMW to get him everywhere, I'd rather, the man of the people, Andrew
Well,
Bailey.
as long as next time you do get a selfie, again,
I'll try
maybe
my
maybe
best.
maybe record him saying like "I love PIQ" or something like that. Yeah, it's worth a
Oh
few beers.
God.
I'll give you a clue. But anyway, we can work that out in over a beer ourselves. But anyway, Mr. Michael Brown, thank you so much for today, listeners. Thank you so much for tuning in as normal, especially our regular listeners. We do see who you are, and we're kind of flabbergasted that you want to keep coming back for more. But anyway, have a wonderful weekend. If you are trading today, keep it tight and don't do anything we wouldn't do. Have a good one. Goodbye.
Goodbye.